Welcome to the Deep Dive. Today we're taking a really close look at one of India's industrial giants, a company that's, well, quite literally helping keep the lights on.
Bharat Heavy Electricals Limited, BHEL. Absolutely fundamental.
Exactly. And our mission today is to tackle this kind of fascinating contradiction we found. We've got BHEL's Q4 results for FY25, painting this triumphant picture, massive scale momentum, huge orders piling up.
Record order book, yeah.
But then we look at the October 2025 stock analysis, and the market's reaction is cautious. So we need to figure out why. Why the hesitation with so much guaranteed work?
It's a really crucial question because BHEL isn't just, any company. It's India's flagship engineering and manufacturing CPSE.
A central public sector enterprise, right?
Yeah. Built on this legacy of making in India since 1964, it operates in really core sectors: power, defense, heavy industry. Understanding this tension between their operational wins and how the market sees them, that's key to grasping the state of India's capital goods sector right now.
Okay, let's start with that legacy then. When we talk about BHEL's scale, we need some real numbers, I think, to really get a handle on just how big they are.
Oh, the scale is almost overwhelming, honestly. Think globally first. BHEL has supplied over 205 gigawatts of power-generating equipment all around the world.
205 gigawatts. Wow. Just for context, how much is that?
Well, put it this way, 205 GW is nearly enough capacity to power, say, all of Indonesia. That's the kind of volume we're discussing here.
Okay, that paints a picture. And domestically?
Domestically, they're the undisputed leader in the Indian power sector, their market share, around 56% of nuclear power capacity and 46% of the hydro domestic market. They've commissioned well over 1,000 utility sets just in India.
That level of dominance in core national infrastructure is pretty staggering.
And it goes beyond just energy. They've been a critical supplier to the Indian Defense Forces for like 5 decades.
Right.
And in railways, over 850 locomotives supplied. To manage all this, they run 16 major manufacturing units across India.
16 units.
Yeah, supported by this immense base of intellectual capital. We're talking over 9,000 engineers alone. It really operates like its own self-reliant industrial ecosystem. Vital for national security, vital for infrastructure.
Got it. So let's see how this huge ecosystem actually performed last fiscal year, FY25. Give us the headlines on the financials.
Okay, so the financial momentum was pretty substantial. Revenue from operations hit about 28,339 crores in FY25.
Okay.
Which marks roughly 19% growth compared to the year before.
19% growth, that's solid.
It is. But the really impressive headline, I think, was the jump in profitability. Profit after tax, or PT, more than doubled. It went from Rs 260 crores in FY24 up to Rs 513 crores in FY25.
Doubled PT.
Yeah.
That sounds great. But let me just push back a bit here, playing the skeptical investor.
Go ahead.
513 crores profit on over 28,000 crores revenue. Aren't those margins still incredibly tight for a manufacturing giant like this?
Yeah, that's a critical observation. You're absolutely right.
Doesn't it point to some pretty deep structural pressures?
It definitely does. While doubling profit is a huge, directional win, the low absolute margin really highlights the fiercely competitive environment they're in, plus the long gestation periods for their projects.
Right.
They deal with massive scale, massive complexity, so controlling costs and, crucially, speeding up execution, those are constant battles.
Okay.
That said, they did hit some key execution milestones during the year that helped drive that top-line growth. They reported commissioning or synchronizing 8.1 gigawatts of power capacity. And notably, in Q4, they synchronized that really crucial 700-megawatt electrical unit #7 of the Rajasthan Atomic Power Project for NPCIL. So they are delivering on complex strategic stuff.
And that success must have boosted confidence, right?
Yeah.
Because here's where it gets really interesting. The demand. The order book. What happened there?
Yeah, this is where they moved from strong results into, record-breaking territory. FY25 saw the highest ever yearly order booking for the company.
Highest ever.
Ever, totaling an astonishing Rs, 92,535 crore. And this huge influx of new business pushed their outstanding order book, their backlog, to Rs, 1,096,328 crore as of March 31st, 2025.
Just shy of 2 lakh crore rupees. That figure is really the core of what we're talking about today, isn't it?
It really is monumental.
How does that massive workload break down across their business areas?
Okay, so the bulk of it, about 80%, is tied to power projects. That's BHEL's traditional strength.
Right.
Another 18% is in the industry sector, and the last 2% is in exports. Within that big power chunk, they secured 14.6 GW of thermal power orders.
Okay.
And critically, that's the highest thermal volume they've booked in the last 10 years.
So a resurgence in thermal orders, too.
Seems like it. But we also see really significant strategic growth in the industry segment, highlighted by that massive order for the plus 800 kV, 6,000 milliW high voltage direct current link.
Ah, the HVDC link. Kavda to Nagpur.
Exactly. That's not just, routine work. This is essential high-tech infrastructure needed to move huge amounts of power across India efficiently.
Okay, so beyond just booking these massive projects, what shows that BHEL is actually looking ahead, adapting its tech, ensuring it can even deliver on this incredible order book?
Yeah, good question. This is where you see the potential long-term strategic value emerging. The focus seems to be clearly on diversification and technological self-reliance.
How so?
Well, in defense, for instance, they supplied and commissioned the first upgraded super rapid gun mount SRGM on board the INS Nilgiri.
Okay, that sounds complex.
It is. Highly complex precision mechanical and electronic system. It shows they have the tech chops for these high-value strategic projects.
Is that a long-term direction?
It looks like it. The sources mention a 2025 partnership with DRDO on radar dome technology. That signals, a sustained shift towards becoming a core provider in high-tech defense manufacturing.
Which probably carries better margins than traditional power projects.
Often, yes, exactly.
What about the making in India angle? If they need to speed up execution on a 2 lakh crore backlog, they can't afford delays from foreign suppliers, right?
Precisely. How's their R&D translating into practical self-reliance?
Yeah.
Well, their commitment is there on paper. They invest about 2.3% of revenue in R&D, but the results are what count. And they reported several really critical import substitution wins in FY25. For example, they successfully developed the complete compressor internals for the BCL 800 series entirely in-house.
Okay, that's significant.
And they also cracked some highly specialized components. They developed their own anti-surge controller for compressor packages and an electronic governor controller for steam turbines. Both were previously imported items.
So this isn't just about saving costs.
No, it's strategic capability. By controlling the supply of these essential complex parts, they potentially cut reliance on foreign chains and gain agility. That agility could be key to speeding up project timelines internally.
Right, so self-reliance could actually enable faster execution. That's a crucial link.
Potentially, yes. And that intellectual capital base is growing too. You mentioned they filed 506 patents and copyrights in FY25.
Okay, what about sustainability? We saw this Harit BHEL initiative mentioned.
Right, Harit BHEL. It's basically their roadmap towards net zero emissions by 2047.
The ambitious goal.
Very. And the actions seem quite hands-on. Over the last 6 years, they've planted something like 386,000 saplings. Afforestation efforts. Plus, 7 of their manufacturing units have now got Green Co certification, gold, silver, bronze. It shows a quantifiable commitment within a heavy industry setting.
And on the energy side.
They've installed about 42 millitorpie of their own solar capacity, which in FY25 avoided over 28,700 metric tons of carbon footprint. So they seem to be managing this huge industrial scale while also pushing environmental responsibility.
Okay, so let's recap where we are. We've established BHEL as this strategic national asset. It logged massive growth, doubled its profits, and is sitting on this just monumental 2 lakh crore rupee demand pipeline.
Right.
Backed by increasing self-reliance, focus on defense, sustainability. Was pretty good.
On paper, yes.
Exactly. Now we hit the wall. We turn to that stock analysis from October 2025. With all this fantastic news, why is the stock showing caution? Why are analysts mostly saying hold? What does this all mean for the immediate future?
Okay, here's the contradiction. It seems rooted in 2 main things: valuation and execution risk.
Valuation first.
Yeah. As of mid-October 2025, the stock was trading around 234.35. The caution is immediately obvious when you look at the valuation metrics.
Which are?
The price-to-earnings ratio, the PE, stands at an astronomical 281.88.
281. Wow.
Yeah, and the price-to-book, PB, is 3.3. Now, for a capital goods manufacturer, especially one with, like we discussed, historically thin margins,
Right.
those numbers basically scream overvaluation at current levels. That PE means the market isn't just pricing in growth, It's pricing in near-perfect execution and rapid, substantial earnings expansion for years to come.
That's a huge amount of pressure, a massive risk premium baked in.
Exactly. Which brings us to the execution risk. The order book is secured, fantastic, but the market is clearly worried about the speed of converting those orders into actual revenue and profit.
And what specifically triggered that concern recently?
It was the Q1 FY26 results, the quarter right after that triumphant FY25 we talked about.
Okay.
Those results gave the market a bit of a, well, cold reality check. Execution speed looks slow. Revenue for that quarter came in at only 5,486.91 crore.
Okay, lower than expected maybe.
And crucially, they reported a net loss for that quarter of 454.89 crore.
A loss after doubling profits the previous year?
Exactly. So the problem isn't the demand pipeline, it's the velocity of delivery, getting the work done and booked.
Why is that proving so difficult? I mean, for a company with this much experience and scale, is it just the sheer complexity of these new huge projects?
That seems to be a major factor, yes. When you look at what's in that order book, these 700 milliwatt nuclear units, 14.6 GW of thermal power, those massive HVDC links, these aren't quick builds. They take years. They involve complex government approvals, land acquisition sometimes, slow revenue recognition cycles based on milestones.
I see.
And the power segment, specifically, continue to show losses in Q1 FY26. That highlights the difficulty in managing these long-term, high-cost projects efficiently in the short term. It takes time for them to become profitable.
Okay, that makes sense. And how does analyst sentiment reflect this?
It lines up perfectly. The overall consensus is a hold. Now, analysts definitely acknowledge the incredible demand and the fundamental strength. 8 out of 20 still rate it buy or strong buy.
Okay, so not entirely negative.
Not at all. But that overall hold stance, it directly reflects those near-term profit worries tied to the slower-than-hoped execution pace and that Q1 loss.
So for you, the listener, the potential investor, seeing these short-term dips the stock was down over the 1 week, 1 month, 3 month periods before October.
Yeah.
What's the argument for sticking with BHEL?
The argument is purely long-term potential. It's all about the size of that order book. Despite the recent wobbles and the immediate operational headaches, you have to remember the 5-year return on the stock.
Which was?
Still an astonishing 713.72% leading up to this point.
Wow. Okay.
The market fundamentally believes in India's infrastructure story, and it believes BHEL is strategically positioned right in the middle of it.
And what are analysts forecasting looking ahead?
They're already putting out 2026 targets around 306. That implies, maybe a 25% upside from October levels, and it's a big if.
If they fix the execution bottleneck.
Precisely. Some firms, like JM Financial, are even more bullish, with targets up around 358 to 361. The potential value is clearly there. It just needs to be unlocked through delivery.
This has been a really insightful look. BHEL truly seems to mirror India's huge infrastructure ambitions, doesn't it? A giant sitting on this mountain of demand, strategically diversifying, profits starting to move. But that operational efficiency, the speed of execution, it absolutely has to ramp up drastically to turn that phenomenal backlog into steady revenue and justify that high price tag.
That is the absolute takeaway here. Faster project execution, it's explicitly named as the key to unlocking shareholder value. The whole focus for BHEL now has shifted from just booking orders to successfully and quickly delivering them. That transition phase, that's the inflection point we're watching right now.
Right. And to leave you with a final thought to chew on, BHEL made those big strides in self-reliance in FY25, remember, developing complex components like anti-surge controllers and compressor internals in-house, things they used to import.
Yeah, that was significant.
So considering this urgent need to accelerate turning that massive 2 lakh crore rupee order book into reality, how fundamentally might this newfound control over its core tech and supply chain actually speed up finishing those huge projects in the coming year or two? Does technical self-reliance truly translate into faster execution speed? That's a big strategic question for BHEL going forward.